Well, hello again. It's Michael here with another quick video discussing one of the concepts within the supply and demand methodology. It's the 28th of May 2023. I hope you've all been well. And thank you to all of you who've been in touch with me asking for more videos. So I thought I'd do a quick one today, just looking at one of the concepts within the methodology where we look to increase the odds of these levels working. And that concept is what is often referred to as the stay away candle. It's often referred to as the move away and the stay away. It's really a really straightforward concept. It's where after a level is formed, you want there to be at least one period where prices stay away from that level and don't come back to it. If a level is formed and prices immediately return to the level, it often tends to fail. Of course, there will be instances where that is not the case, where it works, but more often than not, because obviously we work with probabilities, we want to stack those in our favor. So there will be instances where a level is formed and prices come straight back after it's formed and it works. It's not usually the norm though. So we want to work with what's more common. Common things occur commonly, as they say. So I'm going to show you a couple of examples using, two markets that I was watching that, really showed that the importance of that concept in the last week. One is corn and the other is the Aussie New Zealand. You guys will know that the New Zealand dollar has had some big news in the last week with their interest rate decisions, and we'll look into that. So what you can see on your screen is just that. To embed it in your minds, it's the move away, but it's not just that, it's also the stay away. So if you focus your attention right here, you will see that you have one of the patterns of supply, which is the drop, the base, and the drop. It's a strong enough move, not the greatest, but strong enough move down to at least catch your attention. What didn't happen though is prices did not stay away from that level by at least one period. After the drop away, after this drop away from the level, prices did not stay away. They dropped and they immediately returned. Now, if you go to a smaller time frame on here, you will see what that level looks like. There are lots of supply and demand traders who had this level drawn in or would have had it drawn in, and you probably might have heard me screaming from my charts, don't do it, but sadly some did, I'm sure. But it clearly hasn't worked out that well. One of the reasons, there'll probably be others, but one of the reasons is because if the bigger picture chart isn't right, don't go down to the smaller frame looking for, levels. That's another concept within a concept, but yeah, don't do it. Because what going down a time frame does is just expand, blow up what you're seeing on the bigger time frame. So if the daddy is not good, the kid is probably not going to be so good. Okay, so just bear that in mind. So that's the example on corn. It fell away from the level. The hope would have been that it continue for at least one more period down, but it didn't, and it just went straight back up into what was going to be potential level. Wouldn't have been one that would have met my criteria, but a level nonetheless. And it's just powerfully going through it. Now, obviously, there will be people who will say, well, it's coming into support here, and they're not wrong. But we're talking mainly about the concept of qualifying the quality of these zones. And this is one of the ways to qualify it. Let it move away and let it stay away from that level. Okay, and the second example real quick, because I wanted to make this video really short. I'm going to hopefully be doing a few more of these shorter versions, just focusing on particular concepts, is on the Australian New Zealand. Now, I was watching this during the week. There was news that came out of New Zealand about their interest rate decisions. Again, if I take you back to the replay, this is what happened. You had the drop again, a base, very sloppy base with lots of wicks base nonetheless, and prices came down, even closed below that period and went below this low or just about equal to that low. So definite supply beginning to come in. So yes, the supply and demand trader would be sitting up in their chair preparing, thinking, is this going to be a dump with another level being created? This would be what we would term that stay away candle. It's the market accepting this area as an imbalance rather than looking at the fall away from the level as an opportunity to ram it straight back up. I'm showing you short examples here. It will be the opposite for long examples. If you form a demand zone, and prices go up, you don't want it to immediately come down. You want it to stay away from that level for at least another period. So one way some of my traders conceptualize it is when a move happens out of a zone, you want at least 2 candles to form the leg out of that zone, the move out of that zone. But if you don't have that, the probabilities of it working are very reduced. Now, if you play it forward, you'll see what happened. Prices rammed right back up into that level. Now, let's go to the daily, which is where the issue would have been. Now, I don't know many people who would say, well, that's not a supply and demand level, because it was. It was a rally, a base, and a drop that moved away. Again, not the greatest of quality and all that, but we won't get into that in this video. But that was a level that a lot of people were watching. Wasn't even on my radar because of the reason I just gave you. I was watching it, but it didn't fulfill anywhere near the criteria that I put on my levels, some of which you're looking at with the numbering system that I've created with the candle scores here. But here we go. That again is the child, the son, the daughter, whatever you prefer to conceptualize it as. It's what is inside the weekly. Right at the top there, you see where it is, right at the top of the wick of that first candle down, this red candle down. But it didn't stay away from that level. So if you had gone down and you heard the news from New Zealand and you saw all the New Zealand pairs popping, and you went down to the daily, oh look, it's a rally-based drop, I'm going to short. It would have been a difficult trade. So that's all I got for today, guys. Just bear it in mind. Move away, stay away. Wait for the levels to set up properly. Let them meet your criteria. It will save you a lot of money. Have a good week, guys, and thank you for all your support. Bye for now.